Hello everyone, it's Friday, November 21. Today we'll analyze the charts of the euro and the British pound to identify potential market trajectories. As you can see, the European currency has managed to withstand downward pressure. The euro avoided a significant sell-off despite hitting a new one-week low during early US trading, which maintains its bearish trend. Traders received the longer-awaited data on US non-farm payrolls for September, the first report following the government shutdown. However, given that it is now the end of November and the data reflects September's performance, which showed that the US economy added 111,000 jobs against a projection of 53,000. The overall market reaction was quite muted. Notably, it was revealed that October and November data will be released in December, leaving the Federal Reserve without the latest statistics prior to its December meeting. This lack of data adds to the uncertainty regarding the regulator's future policy path. Many traders and economists now estimate that the US Central Bank will hold interest rates steady next month, and these expectations have recently supported the greenback. Yesterday's data also indicated that the US unemployment rate climbed to 4.4% in September. Most importantly, average hourly earnings increased by 0.2% in September, suggesting that inflation may remain under the Fed's control. Therefore, the regulator is unlikely to rush to adjust its monetary policy, reinforcing the likelihood of a pause at the December meeting, a sentiment echoed by Fed officials over the past 2 weeks. Now let's take a look at today's macroeconomic calendar, which features a batch of important news releases. The UK is set to release data on public sector net borrowing and retail sales for October, which are expected to remain unchanged from September levels. The calendar also includes figures on manufacturing and services activity from France, Germany, the UK, and the Eurozone. If the statistics indicate a downturn in activity, particularly within the services sector, which is the driving force behind European economies, it could negatively impact risky assets. In addition, ECB President Christine Lagarde, Bank of England Chief Economist Hugh Peel, and several Fed officials are scheduled to speak today. Later in the day, the US will report similar business activity data. The US manufacturing PMI is currently above the critical 50-mark threshold, indicating steady economic growth. Meanwhile, the services PMI is expected to come in at 54.6, with the composite index also projected to remain above 50 points. Better than expected figures could bolster the US dollar. However, it is important to note that the primary driving factor for the greenback recently has been expectations surrounding the Fed's December meeting rather than fundamental statistics. Turning to technical analysis, the 1-hour EUR-USD chart indicates that a false breakout at 1541 would generate a sell signal, potentially dragging the euro down to 1.1513. In this area, bulls are likely to step in. However, if the price breaks below 1.1513, the euro could drop to 1492 and then possibly extend weakness to 1472. At this level, I would recommend going long on a rebound, targeting a 1530 pip move. Long entries at 1513 and 1.1492 could be considered on a false breakout. Alternatively, a break in consolidation above 1541 following the release of Eurozone data would trigger a bullish correction, allowing the euro to recover losses incurred on November 19th and a rise to 1564. At this level, it would be prudent to consider short positions on a false breakout. The most distant target would be 1.1584, where it would be wise to go short on the rebound, aiming for a 1520 pip move. Speaking of the GBP USD pair, a selling opportunity may arise at the levels of 1.3100 or 3126 on a false breakout, particularly if the data on UK services activity comes in weak. Conversely, if we receive positive statistics, the British pound could bounce back to 31.52, where I would recommend considering short positions on a rebound, anticipating an intraday correction of 20-25 pips. Long entries could be set at 30.69 or 30.38 on a false breakout. Going long on a rebound would be relevant at 1.3013, targeting a move of 25-30 pips. Good luck to everyone and have a great weekend.